crypto loves to do this thing where you wipe everybody out and then it full sends after. They were like, nobody cares about ETH. I don't think that's true. I think TradFi is going to salivate over a commodity that has yields, whether you love the ETH or not. The mid to long-term picture for crypto hasn't been this positive in a long time.
Hi there, this is Laurent. I'm the co-host of Verified, the brand new podcast by Bitcoin Suisse. But this isn't just any podcast. It's your backstage pass into the crypto world. My co-host Dominic and I are analysts in the crypto industry, where it is our job to stay on top of the latest market and crypto developments. None of the discussed is financial advice, of course. It's all for informational and entertainment purposes only.
Welcome back to Verified. Today I'm really excited because we have the pleasure to be joined by Will Clemente. He's one of the on-chain wizards, a proper researcher and overall a crypto OG in the space. Will has gained prominence for his highly relevant analysis of blockchain data and also market trends within crypto. And also as a co-founder of Reflexivity Research, which was recently acquired by DeFi Technologies. Will's expertise centers around Bitcoin fundamentals and also especially on-chain metrics and market dynamics. Today we dive into Will's latest research, his views on the current state of markets and what on-chain data is telling us about Bitcoin's and its peers' future trajectory. And with that, Will, welcome. It's a pleasure to have you on the show.
Dominic, thanks for having me, man. I appreciate the introduction. You weren't kissing my ass that much when we got coffee in Switzerland.
No, nice. Will, thank you so much for joining us. You're based in New York, finance major from East Carolina University, crypto native and entrepreneur, co-founder of Reflexivity, seamlessly producing high-quality research reports for the crypto industry. Will, please share with us how you got started. We started at Target to crypto to Reflexivity. Please take it away.
Sure, man. I guess to back things up a bit, I was in the back half of my first year in college. Ended up going back after my first semester, ran out of money for beer, basically needed to get a job before the second semester, took up a overnight stocking job at Michael's, which was like a very popular arts and crafts store here in the US. I'll come in at like 2 a.m, unload the 18-wheeler, then we'd stock everything. Very boring, mindless work in the middle of the night. It's like me and like 2 other guys on the shift, and we were each in like our own section of the store. So at the sake of trying not to lose my mind, I just started listening to various podcasts. After a while, I was like, okay, well, let me try to use this time to maybe learn a thing or two. Decided, all right, I'll try to teach myself things about markets or investing because making money sounds cool. Got into the Warren Buffett approach of, I was basically drawing like discount cash flow models at my desk, trying to, find fair market value for businesses in the public markets at my desk. When I was 18, after a while, COVID hit, so markets tanked. At this point, I started working at Target. We got sent home from school, so that's kind of what I was doing on the side outside of taking my online classes for university. Everything rebounded very quickly. I was quite baffled, okay, why is the market rebounding when the economy continues to appear to be deteriorating underneath the surface? Came to the conclusion that liquidity is what drives everything, and the monetary policy is the underlying thing that drives all asset prices. And so on the back half of that conclusion, decided, okay, well, what's the thing that you want to own during this period of monetary debasement, which was, even more apparent, especially during the amount of stimulus that was pumped into the system during COVID, led me to believe that Bitcoin was probably the best horse to bet on. Basically, like the Paul Tudor Jones thesis, started piling all my very small paychecks from Target into Bitcoin at like 6, 7, 8K. Continued to use DCA, all the money that I could. It was obviously living with my parents at the time, so I didn't have to pay rent or anything. Had the pleasure of watching Bitcoin rip up from there to whatever, 60, 65K towards the end of the year. And during that time period, also made the Twitter account over the summer of 2020. Really just tweeted out my Bitcoin thesis. I don't think I said anything particularly groundbreaking, but I think people just liked that I was like a young kid that understood the Bitcoin thesis. And so the Twitter account went up. Some of that, benefit of the tailwinds of Bitcoin going up only during that time period. After a while of just kind of talking generally about the Bitcoin thesis, started getting a bit more interested in kind of the market dynamics of Bitcoin, understanding, what makes Bitcoin move, all those types of things. And then heading into 2021, ended up going to work at a Bitcoin mining rig brokerage firm. I headed some of the research there specifically on Bitcoin. During that time, got a bit more active on the altcoin side in terms of trading. After a year of working there, decided to branch off and go start the research firm with Anthony. We co-founded Reflexivity Research in September of 2022, which was an interesting time to start a business right before FTX went down, and that very fun period of time that we all went through in Q4 of 2022. Operated that business for a while and ended up getting acquired earlier this year. Still involved in operating the business and continuing to make sure that high quality research is put out. We also we started getting into the events business earlier this year. Did our first event in March. We'll do a second one in the back half of the year. I won't give too many details there. I don't think I've said that publicly, so a little hint for the listeners. And then so here we are today.
Wow. What a great journey, Will. Thanks for sharing that with us. I seriously believe it's a story that really get people going, and also mad respect from my side to have this high conviction bet on a super risky asset class at such a young age. But I also think at the same point, it's something that many young people lack. I feel it's the only period in life where if you have conviction, you should go, like, no financial advice, of course. You should go more to the riskier side and then basically taper off as you get older.
Yeah, I completely agree. I think most people, you want to take more risk as you get older and you get this sense of confidence, which is great. But I do agree with you. You should want to almost counterintuitively take more risk when you're young. You don't have a wife or kids or any responsibilities at all. If the decision doesn't work out, then you can go right back into whatever you're doing. I dropped out when I was 19. So if it didn't work out, I could have always gone back to school. So it didn't feel like that difficult of a decision to make. And then the other thing is, like, when you're 19 and like the frontal lobe of your brain hasn't developed yet, you don't really have this sense of like fear of this thing doesn't work out. You're kind of just like, okay, well, this feels like a pretty high probabilistic outcome that this is probably going to work out. So 100% long ramp to say I completely agree with you. I think you should want to take as much risk as possible early on.
Especially if you, as you outlined, if you combine it with a deep understanding of a niche industry and you just have like high conviction, go for it, play it safe in the longer term. But yeah. So previous episode, I don't know if you saw it yet, but it was pretty much Ethereum centric. And today we dive into a broader range of topics with you. And I feel you, as more of a generalist, are such a good sparring partner for this episode. We have a lot of ground to cover today, and without further ado, I suggest we dive into the current driving forces behind the crypto markets, starting with basically, like, the last couple of days, we saw somewhat a relief in crypto markets, but June proved to be very challenging for crypto assets, as you remember, which also aligned with historical weakness in June for Bitcoin and crypto assets. At the same time, US equities that are currently carried by AI and the tech sector really outshined crypto for various reasons. And there I want to dive into some supply and demand mechanics, because Bitcoin faced like this great supply overhangs from German government sales, which now resolved. But then we also have like facing Mt. Gox now. I think 36% are now distributed of 140k Bitcoin. So it's 3x of the government selling that we saw. But in my opinion, it's also somewhat non-significant if you compare to daily spot volumes. So I feel like the supply overhang is more fear and sentiment driven than actual sell pressure when it comes to spot volumes. And then on the supply side, we also had the well-known post-halving miner capitulation, which really pressured Bitcoin prices. On the other side, on the compensating side, we have these great consistent net positive flows into ETFs, which provided a great source of demand. And then we have this other pillar, which stems from the FTX bankruptcy proceedings, as they might inject like a good chunk of liquidity, up to 16 billion, which gets distributed in cash to the creditors that might be very prone to re-inject that capital into crypto. So that might catalyze some positive sentiment. And also I just recently saw that miners now produce more Bitcoin again than they actually sell. So I feel this is also tapering off. My point is there's kind of a notion of these bearish catalysts being wiped out while bullish catalysts are gaining momentum. And now I'd like to hear from you. Maybe you could guide us through your high-level perspective on these supply and demand dynamics. And also, what are the most interesting on-chain indicators that you're looking at?
Yeah, for sure. I guess I'll preface with I don't really follow the on-chain analysis as much anymore, but I guess we can back up and kind of walk through, what's driven Bitcoin to date. I guess year to date.
Please.
There was a lot of front running of the Bitcoin ETF. Then people got kind of cautious around, okay, well, are the flows actually going to show up? There's kind of a local top that was put in on the actual launch of the ETF. Bitcoin sold off whatever 25-30%, and then it ripped back up as the ETF flows start to suppress to the upside. We got this almost like kind of sideways consolidation as those flows started to kind of subside. It looked like somewhat of a distribution top. At the same time, we had a lot of froth in the market. We had like Iggy Azalea launching a meme coin, and just various signs of just general froth in the market. The amount of pumped up fund tokens that had launched was like going through the roof. Everybody was speculating on meme coins, including myself. I was rambling Dominic here off when we met in Switzerland about meme coins, and I think everybody was dabbling whether they're going to say they were or not. And then also just on the derivative side, there's a lot of leverage that piled up both on BTC and ETH. So I just think in general, you had the ETF flows started to subside, and then at the same time, there's just a lot of froth in the market, dispersion taking place as people go down the risk curve, bet on things like meme coins or other alts. At the same time, towards the back half of that consolidation into the end of June, we started to get several headlines about a supply overhang that was finally getting released onto the market. So you guys have been in this space longer than me. People have been talking about the Mt. Gox coins coming out of the market for years now. Every time people bring it up, everyone's just like, oh yeah, well, we already got that in a year. But I think this time everyone was like, okay, this is actually happening this time. So there was a lot of concern there. And then on top of that, it very quickly became apparent that Germany was actually going to become basically like full stack dumping their entire Bitcoin stack that they had seized. So they had 50,000 BTC that they began moving to different OTC desks and exchanges. I frankly think the execution of that was pretty horrible, but they began to sell that in pretty rapid fashion. Bitcoin ended up breaking below this range that it had been trading in from like call it 60K to 72K or 70K. Broke down, wiped out a lot of leverage. We had basically the largest liquidation event in terms of like, broad crypto market, not just Bitcoin, but the entire crypto market, open interest getting wiped out. At the same time, Germany, basically finished their selling. And so over the last 2 weeks, we got to this pretty interesting pivoting point where I tweeted out that the vibes were shifting, where, Germany had finally emptied their entire clip. The market absorbed, about $3 to $3.5 billion of Bitcoin being sold from Germany alone. Like you said, it appears that a decent chunk of the Mt. Gox Bitcoin has now been distributed. Some of the Bitcoin miner capitulation has been worked through. And then at the same time, you had basically this complete flush out of the derivatives leverage that was built up, particularly in the futures market on perpetual swaps, which, if you've been trading in the market for a long time, that Bitcoin and the crypto market loves to do this thing where it basically shakes everybody up before it grips higher. So it seems like we kind of had one of those. And as of now, it appears that we're kind of reclaiming that range that Bitcoin broke down from. Meanwhile, while that was taking place, we had this a week or so over the last week where, Mt. Gox finished selling with that liquidation event. And then we started getting headlines like Trump was going to speak at the Bitcoin conference. JP Morgan started to get bullish on crypto. The CFTC was saying 80 to 90% of crypto assets were non-securities. So just we started to get the kind of wave of positive news lines finally hitting. And then obviously the big one is the ETH ETF, which appears that it's going to launch next week. And so it just felt to me a little bit, and that's kind of why I tweeted out, the vibes are shifting, as the market just felt like it was a bit oversold relative to kind of everything that was taking place. So now it seems like, again, we started to reclaim that range. Haven't seen a ton of derivatives data pile in, at least as of yesterday when I last looked. I feel like the fundamental case for crypto is continuing to grow stronger, particularly on the regulatory front. We got more positive regulatory sound bites from Hester Pierce this morning talking about implementing ETH staking into the ETFs. Obviously, Trump is going to go speak at the Bitcoin conference in 2 weeks. Seems like he has a pretty good likelihood of implementing some type of change in the regulatory regime, particularly at the SEC here in the U.S. And then also the other big one was Trump selected J.D. Vance as his VP, who, for anybody who doesn't know, he's fairly pro-crypto. He has disclosed holdings in Bitcoin. I believe like 250,000. I don't know what his total net worth is, but he didn't not like a crazy amount, but he does hold Bitcoin. He's been pretty pro crypto in terms of how he's spoken publicly. One of my favorite tweets that somebody dug up and I ended up quote tweeting was at the beginning of 2022 when all the Russia stuff took place. He basically tweeted out that this is why crypto exists, basically as like this is a way to get away from the control of the banking system and like the weaponization of the banking system and payment system that the U.S. had done towards Russia. Which, regardless of your opinion of Russia, it's just not good that the U.S. can basically cut you off out of your FX reserves. So my point in saying that is I think he gets the whole crypto thing, and he's not just saying that just to LARP as some pro-crypto guy to get some votes. So I think now it's becoming fairly clear that there's probably going to be a kind of regulatory shift here in the U.S. over the next year, and that seems like it's become increasingly clear over the last week or two. So I feel pretty constructive at the market. Obviously, we've had like 4 or 5 days of up only. I don't know if we pull back in the short term. I have no idea. But I think the kind of mid to long term picture for crypto hasn't been this positive in a long time.
No, that's so true. I think you've touched on quite a number of points there. Maybe just going back to the point in Germany, it was just the state of Saxony, which is a relatively smaller state in Germany that conducted the sale of the seized Bitcoin. And since then, the price has recovered with quite the strong ETF flows, I think back to like 64K as of today. So I think for me, though, the key question is like, why sell in the first place? Like that's the part that's baffling me, especially because we have ETFs, not just in the US, but also in Australia, Canada, and Brazil. And even some nations are adopting it as reserve currency. So even though some people in the German parliament are saying, hey, look, we should keep this as a strategic reserve, the reasoning behind the sale, I don't really fully understand. It's either going to go down as a really big fail, but like from here on out, like, do you maybe foresee more countries acquiring Bitcoin as reserve currency status? Or like, how do things work from here? Like Germany's just offloaded, but is the outlook going to be different for other nations?
Yeah, and you guys live in Europe. I don't. I think you have a pretty good understanding that Germany's not quite the greatest nation at making big strategic decisions.
Fair.
So that doesn't entirely surprise me. I don't know if there's any particular reason outside of maybe some like lack of understanding of Bitcoin and how it could serve their country as a strategic reserve asset. The other one is the nuclear power stuff, but I won't get too political for the show of a history of Germany's decision making. But yeah, my expectation moving forward is that you'll have other countries that do acquire Bitcoin as a strategic reserve asset. I just think the way that Bitcoin adoption is incentivized to work in kind of a game theory, if you will, that the Bitcoiners have all been theorizing for many years now is that the countries that need Bitcoin the most adopt it first, and then the countries that are least incentivized to adopt it end up adopting it last. And so, you've got countries like Nigeria, Argentina, El Salvador embracing Bitcoin. I think, over the next decade and even shorter time frame than that, I suspect over the next, 3 to 5 years, we start to see some of these small to mid-sized nation states that take a small stake in BTC. I think one of the biggest catalysts, and obviously it hasn't led directly to, or at least publicly that we know, hasn't led to any direct buying of Bitcoin, but definitely is like preconditioned people to understand the value proposition of Bitcoin as a reserve asset was the Russia stuff.
Yeah, absolutely.
I think one was the Canadian truckers that got their bank accounts frozen on like a personal level, but on a nation state level, when Russia basically got $300 billion of their FX reserves frozen by the United States, that should be a pretty big wake up call to any country around the world, and including our own adversaries. The fact that the United States can just weaponize the financial system and just cut you out of your reserves at any time. Bitcoin and gold are obviously the two best bearer assets on the planet. As Bitcoiners, obviously, we think Bitcoin is superior. We can go down the list of why it beats out gold on every single property of transportability, security, verifiability, all these things. You could take $1 billion of gold anywhere in the world, but, you're going to have to, you'll probably spend $1 million on security. You have to load up a giant plane to put it on, and then probably have 2 fighter jets following it along so you get shot out of the sky by some other country and try to steal the gold.
Yeah, don't tell anyone you're moving it.
Yeah, you can't tell anybody. With Bitcoin, you could take $1 billion of Bitcoin anywhere in the world in your brain and obviously verify the supply, all these types of things. So I think over time, you'll start to see Bitcoin continually trade more as like a global macro asset. And that'll be fueled, as to your point, if some sovereign nations continue to adopt it as this kind of strategic asset that will, further establish Bitcoin as that. I think this cycle, it's become clearer than ever that you've got Bitcoin and then everything else, right? I think alts can do fine, and you will always have certain baskets of alts. Obviously, this cycle, it's been the memes instead of like the NFTs last cycle, but it's been clearer than ever that perfect, because there's just so much supply that's coming onto the market from these alts that has to get unlocked, and there's just not enough money coming into the market to support all these things. But I think it's clearer than ever that you've got Bitcoin as this strategic reserve asset, kind of established, macro asset, and then all this other stuff, which is more so like early stage tech. I think it's basketed in with early stage tech. So I suspect that you could see dispersion between Bitcoin and the rest of crypto, if you will, and it'll probably continue to trade at a higher correlation to something like gold, as opposed to historically it's traded like the NASDAQ, I think, and that's just a lack of understanding by the market.
Yeah, no, that's totally fair. You've touched on some really valid points, from the balance of power and how that could shift over the coming years as like countries that need Bitcoin are the first ones to acquire it, and then as well exactly the weaponization of currency, which that's a shot in your own foot. And these sanctions are a clear example of how sanctions actually act as a double-edged sword. And I think Europe as well is really feeling the pinch, maybe more than just a pinch. But if you look at like historical events or just recently, and then projecting forward into the future, a little bit of TA here on the Elliott wave side is that we're seeing this wave 4 correction play out right now with Mt. Gox and Germany. And then that's immediately now going to be corrected by the final wave 5 based on a potential cut in rates in September. I think that's like currently at 83%, but then you also have the potential Trump presidency that you mentioned earlier as well. So it's interesting to see how the events fundamentally also align with very high time frame Elliott wave market behavioral science. And I just want to throw that in. I'm not sure if you're looking at TA at all.
Yeah, I don't follow like Elliott wave specifically, but I do just draw like horizontal lines on the chart, and I think it's like if you just literally just draw a line from, call it, the 2021 highs and look where Bitcoin's traded on the monthly, we basically had this kind of shakeout over the last couple of weeks that shook a lot of people out that maybe had their stops back below this 2021 highs. Obviously, we got 2 weeks left in the month for that candle to close, but as of right now, it looks incredibly constructive to me. It looks like one of these things Bitcoin loves to do, where it shakes everybody out and then springs back up. So hopefully this monthly closes exactly how it is now. But I think as of right now, it looks great.
Nice.
Maybe touching on the previous discussion, I wanted to add with these sovereigns. I mean, since none of the big players has committed yet, I feel we are in somewhat of a kind of this Spidey meme kind of situation where everybody is like hesitant, but at some point somebody makes the move, and then I feel like it will snowball really quickly. And on your altcoin take to the correlation to BTC, I fully agree. Like, it's so different this cycle, and I feel like most of it stems from Bitcoin just having that institutional gateway now, while altcoins just don't. And let's discuss later how the ETH ETF might change that. But on the institutional gateway side, I know it's a topic that is already kind of worn out, and yes, we get it, it's important. But yeah, I feel we still need to speak about it as it becomes a stable in the space. And these ETF instruments, especially in the US, they are just cooking. Because just recently, year to date, the net flows now crossed 60 billion in spot in BTC. Which is crushingly impressive in my opinion. And just for context, there was this guy from the Bitwise analyst who compared it to that these 6-month inflows since launch are more than the sovereign capital flows into any country during the second half of 23. Just for kind of realizing the size of these flows, it's really impressive. At the same time, we know gold, I mean, it has some form of central bank demand currently, but the gold ETFs still struggle with year-to-date net outflows of around 4 billion. And I feel like that strong institutional demand on the ETF side is not only stemming from these Bitcoin ETFs, but also from CME Bitcoin futures products that also did another high in Q2 recently. And now I wanted to get your perspective on how surprised are you actually with the amount and the scale that institutions are flocking into our space? And basically that also changes our industry at a rather rapid pace. To me, at least, it was pretty surprising. And I feel it also crushed all estimates that we had before. And then on a second note, how do you rate these loud endorsements and buy-ins for Bitcoin being a legit asset class, also in retail portfolios, from people like Larry Fink and other TradFi giants? What's your take there?
Yeah, I mean, it's great to have Larry Fink on TV shilling our bags. You know, that's always great. We'll take as much shilling of the bags as we can. Yeah, man, I mean, I think in the shorter term, the flows surprised me. Yeah, I think as hardcore Bitcoin believers, we all thought that the flows over time would come. I thought maybe they wouldn't really come in full force until the back half of the year, just because it takes time for these bureaucratic institutions to get approvals internally, and they don't move quickly like us crypto folks. So it just takes time for some of that stuff to take place. I do think though, as we get into like the end of Q3 into Q4, we'll start to get some like consistent passive flows. Like this is the thing I think that the Bitcoin market specifically hasn't had that indices have had to date. We've got the Bitcoin maxis that are like DCAing into Swan or whatever, but like we need passive flows in size for this to become like a institutionalized asset class. And the reason partially why Bitcoin has been so hyper cyclical and so volatile historically is that we don't have those passive flows to smooth things out. Now that the institutions will likely continue to come into the space, you know, having continued passive flows will smooth out some of the volatility of BTC and likely means that it probably trades differently than it has historically. So I think we'll start to see that pick up towards the back half of the year, just as, again, some of these larger institutions get through their internal approval processes and such. And then, like, I like your point about on the nation state level. I think that also takes place on the corporate level, too.
Yeah.
Frankly, it's the same thing that takes place personally, right? Your buddy shows you some bag, you know, you're like, okay, cool. He shows it to the group chat. You know, he shows it first. You're like, all right, I better buy it before the other 7 guys in the group chat buy it, right? And then all of a sudden you all buy it and then the thing rips. So I think you get that same dynamic on like a broader scale and more professional scale with corporates and institutions where, you know, Michael Saylor is like, you know, as much as I love Michael Saylor, he's awesome. I think he'll end up being one of the richest people on the planet once the Bitcoin thesis plays out. I think if you were to ask a lot of these, you know, peripheral fund guys, they probably think he's like a little out there, frankly, and maybe like a little too hardcore Bitcoin, right? I think like Larry Fink coming in and giving the stamp of approval on Bitcoin, I think is a lot more meaningful. And so once you have a couple more of these guys that come out, like you said, it'll just continue to snowball. And then on the nation state level, you know, that will also take place, I suspect. I think the other big underlying trend, which I haven't really touched on any of the macro stuff, but what's going to ultimately drive all of this is just the debt situation in the United States, right? The fiscal situation is unsustainable at this point. I think this has been the core driver of markets over the last decade, but particularly since the bottom in 2022. It's just this understanding that it doesn't really matter what you do at the margin with interest rates. Like, of course, it matters short term for the market and all that shit. But sorry, I don't know if I can swear on it. But
Easy.
over the long term, you know, the deficit for the U.S. is what's going to drive markets forward because the U.S. has to. It's just math, right? When you look at debt to GDP, there are 2 things that you could do. You can ramp up GDP to close in that gap, or you can debase the currency to close in that gap. And, you know, maybe we have some type of like AI fueled utopia. I don't know if that's happening like in the short to intermediate term. Maybe that plays out over the long run. I think there's a like pretty low probability of that happening. But, you know, what I suspect the way that will get resolved is just that the United States continues to debase its currency. And you're already seeing hints of this. For example, Powell coming out a couple days ago, maybe it was late last week, I forget, there's been so many headlines lately, of him basically hinting at them revising the inflation target slightly higher from 2% to 3%.
Yeah,
So,
what a
you know,
surprise.
yeah, what a surprise, right? Nobody could have seen that coming. But that's how I think the U.S. will resolve the debt to GDP issue. Still let inflation run slightly up, debase the currency, they won't explicitly come out and say, hey, we're going to let inflation run hot. But that's what's going to happen. And ultimately, that's going to be the thing that drives people to look to allocate to something like Bitcoin.
Yeah, I fully agree on that front, because they only have so many options, and the likelihood of GDP basically like going into a superhero mode and just basically wiping out all of the deficits is I don't buy it. It has to be debasement. But we will dive deeper on that topic later on.
Yeah, so I think I'll move it on to the Ethereum sentiment at the moment, and just addressing the elephant in the room being the ETF. So when not many research outlets predicted an ETH ETF, we have it, right? So while we're still waiting for the final approval, I think we're more than certain that it will go off with a bang, no doubt. Or at least I don't have much. So SEC finally got back to the issuers this week, asking them to return the S1s in, and then request effectiveness on Monday close for a potential launch on Tuesday. That's, I think, 23rd of July. So what's your estimate then on inflows, especially if you contrast it with Big Brother Bitcoin? I'm not sure if we're going to see an outperformance compared to Bitcoin, but definitely strong performance.
Yeah, it's a great question. To be honest, I'd be talking out of my ass if I gave you an answer or like a percentage of what I thought it was going to be of the Bitcoin flows. But I'll say this, I'll suspect that it's going to do better than people are expecting. Some people are saying like it's going to do nothing. And at least I love the Bloomberg guys, but at least initially they were like, they're not going to get any flows at all. Nobody cares about ETH. I don't think that's true. I think TradFi is going to salivate over a commodity that has yields, whether you love the ETH or not. I think that's the way that they're going to view it. They're not going to view it as like, I saw a lot of, for example, again, respect Andrew King. I love Andrew. I talked to him a fair amount about like our market views and stuff, but he put out this long form thesis about how the ETH ETF flows were going to be lackluster because of the PE ratio of ETH. And it's like, well, nobody was talking about the PE ratio of ETH when it ran to 4K in 2021. And I don't think that's how people are thinking about it. They're probably just going to say, okay, well, this is the second largest crypto asset. So people just, your brain goes off of like, over time, boomers have watched several different asset classes emerge, and they're like, okay, well, this is the second one. So I go 70-30 BTC ETH or whatever. Also, I think there's going to be a lot more of the technologists that grasp onto ETH. And then the last piece is the yield stuff with the staking, the being able to say, okay, well, this is a yield bearing commodity. I mean, that's like boomers are going to salivate over that. So I think the ETH ETF flows will do just fine. I think the real exciting thing will be if they can get the staking component approved. I just think this is another hint that there's this kind of underlying regulatory shift that's taking place in the background underneath the surface in the United States. I think we'll probably, if things continue in this way, I suspect, eventually we'll get a Solana ETF. Maybe we need to get Gary Gensler out of office before that can take place. I don't think that happens like this year, but maybe that could take place like sometime mid next year. But yeah, I think the ETF flows will be fine. From like a market standpoint, we had that God candle on ETH like a month and a half ago when we first got that headline. A ton of open interest piled in on that. I think there were a lot of stale longs that were probably in there. Obviously, market sold off. Again, second largest liquidation event since FTX collapsed. All of that OI got wiped on ETH.
Let's not forget deflationary nature of ETH as well. I don't think that's hit headlines yet, but anyone looking into it should be paying attention.
Yeah, that's interesting. The other stat I saw today was there's an all-time high amount of ETH locked up in smart contracts, while there's an all-time low amount of ETH on exchanges. So I just think that the supply dynamics look pretty favorable for ETH. I think it's in general, the point I was going to say about the positioning is, in the shorter term, you had a lot of people that I think had gone leveraged long ETH, after the initial ETF news like a month and a half ago. All those people got wiped out. Again, crypto loves to do this thing where you wipe everybody out and then it full sends after. We wiped all those longs out. I haven't seen a ton of positions pile back in so far on this move. Basically, I've already retraced that entire move down. And I think just in general, there's been a lot of people that rotated into Solana or like capitulated out of ETH into Solana over the last couple quarters. And just, you can see it on the timeline, right? Like people have been dunking on ETH. I'm not like an ETH Mac thing. I'm just like objectively like observing what's going on, or I do my best to. It's like, it's just pretty clear that like the sentiment is like, ETH is trash. No one's ever using ETH again. Everybody's only going to use Sol. No one's going to ever bid up ETH again. And typically whenever you see, it was like Solana's sentiment was much more extreme at the bottom of 2022. I mean, people were literally like calling it a scam and saying it's like literally going to zero, right? So it's actually the pattern recognition of being in the space for a while starts to go off, and I think you've got a similar dynamic taking place around ETH from a sentiment standpoint. Meanwhile, this high dynamics that we talked about, and then there's a decent likelihood that the ETF flows could surprise to the upside. So I feel pretty constructive on ETH. I don't have a position in ETH at the moment, but I feel pretty constructive on it. I think it'll do just fine.
Nice. Thanks.
Yeah, I'm also on the same page in that regard. I mean, first of all, it was pretty healthy, as you outlined, that the entire longs basically got wiped out after that announcement or after the momentum surrounding the ETF. And then I also feel like the staking aspect would be really the final puzzle piece, as I feel the market for a yield-bearing asset, especially among the boomers, is like substantially higher than for just a very plain vanilla store of value asset. And just to add some context, because I agree basically with everything that you guys just discussed, I feel the Ethereum setup, when we look at the previous Bitcoin setup pre-ETF, pretty much mirrors the Bitcoin setup when it comes to supply and demand dynamics. Because aside from these ETFs, we also have many others bullish catalysts, including the whole tokenization topic. BlackRock's tokenized fund just crossed 500 million. Goldman Sachs announcing 3 more tokenization projects by end of year, likely building on Ethereum. Then we have all of these regulatory improvements looming. I mean, the staking piece would be like basically the end game, because then it's clear it's not only vanilla ETH that is a commodity now, but also staking. And then we have scaling. Guys, think about scaling solutions. We now have a 20x scaling factor. Like the roll-up centric roadmap works, like it's scaling. And basically the transaction cost is like at 1 cent or lower. But as you outlined, there was this great piece from Kaito AI. The sentiment just last week basically hit rock bottom for 24. So basically there's this huge sentiment to catalyst jaw. And I feel this has to close to the upside at some point. Because at the same time, we have this almost supply crisis where you have this pristine collateral asset ETH that just migrates or sits in contracts because it's just so attractive to yield farm with it when we think about restaking or AO or something like that. And then there's nothing on. I mean, it's just a very explosive cocktail in my opinion. But I want to spend more time on Solana that we also briefly touch. To me, it's really the next customer in line when it comes to becoming an institutional asset. And I digged into some of the fundamental metrics, and it's really impressive because also on-chain fundamentals are really solid. We have these tech stack improvements when we think about new features like CK compression or blinks, which immediately triggered an increased transaction volumes. And then, institutional interest is growing, displayed by Vanex's first filing for Solana ETF. And then also, not shilling ourselves, but Solana, based on its metrics, also managed to now join the Stoxx Digital Asset Blue Chip Index. So it's considered to be very strong across the core metrics that are really important, basically to measure what is a blue chip and what not. Yeah, I just would like, I mean, we discussed Ethereum in length now. I would like to get your view on Solana and also the challenges surrounding a potential ETF listing. Because as you know, many people argue, hey, there's no CME futures product. Like, no way there will be an ETF on it. But then there's entities like Vanek that say, yeah, maybe basically a surveillance sharing agreement is just enough to get it listed. So what's your view on Solana and the challenges it faces on the path to becoming an institutional asset?
Yeah, for sure. I guess to start, I was going to say this, but I didn't want to cut you off before you even asked the question. But I think it's like, if you're bullish on ETH, do you just get long SOL? Because I think the way that people are viewing this is like, okay, the ETH ETF launch is more of a, hint that there's this kind of underlying regulatory shift that's slowly taking place in the US. If you extrapolate that out, especially if Trump gets elected, puts a different head of the SEC in, what's the probability of the Solana ETF getting approved again? It's been pretty high. So it's been pretty interesting to see almost every time there's been a positive headline for ETH, you start to, still get bid, but Solana almost gets bid up even more. So I guess that would be my question to pose for listeners here on like positioning between both of them. I think I've been seeing a lot of the same, on-chain fundamental stuff that you have, or at least on Twitter. I've been seeing a lot of it of, Sol is still relatively undervalued, at least if you, everything in crypto is like relative comps of like this chain is this based on this metric relative to this on-chain data point, so this one should be worth this. And when you compare Solana to something like ETH, there's some of the other L1s, and it still seems like it's been fairly valued on a lot of those metrics. Again, I just think it keeps coming back to this regulatory thing, right? Like, yes, I don't think that the Solana ETF will get approved this year because of kind of the futures thing, right? Like, I think the reason why ETH got pushed through is because you had the CME futures ETF that got approved. And so, yes, it was like, all right, you lost in court to Grayscale. We're not going to waste more resources and fight them on ETH as well. We'll let you guys get that one.
Yeah,
But,
true.
you don't have the same thing on Solana. So I suspect personally that you probably don't get a Solana ETF this year. Again, though, I think sometime next year you probably start to see the curtain get unveiled of allowing a lot of these favorable crypto regulations start to get put into place. And, I put out this tweet like 2 or 3 days ago and basically put in a list of like, if you want to make a bet on there being a shift in the regulatory regime in the United States, how do you express that view? And like, one, for me, and maybe I'm biased because I have Coindex, but I think number one is Coinbase probably.
Mm-hmm.
You also have Solana for the ETF, like DeFi tokens with revenue, companies in Canada that could get uplisted, disclosure of a position, the company that acquires DeFi technologies, but there's obviously also Galaxy, which is an even larger business by market cap. And then also you can buy like secondary equity that you think is going to IPO in the United States. Like, I think those are probably the 5 best ways to get exposure to it. But I suspect as it becomes clear that, Trump directly gets in office, and, also having JD Vance now on the ticket as well, who's pro-crypto, and then also continue to get these data points of changes in language from the regulators in the U.S., I think you'll start to see those trades begin to get put on.
No, it makes a lot of sense. I think before we touch into some of the regulatory changes and then like the political theory that's going to support that, I have a very quick question. I want to know, like, what is your take on the different scaling approaches regarding smart contracts? So integrated versus modular, and then the controversy around value capture. So fat application theory. And I think ETH is a culprit here. Is data availability going to become a commodity? And how valuable is the narrative of being a settlement layer, really?
Yeah, I guess I'll say some time and say I'm not super technical, so I'm not going to have a great answer on those things. But I'll say from like the value capture standpoint, I tend to be in the fat protocol thesis of that. The protocol ultimately is going to be the thing that benefits the most. Just because like the way that people, especially from the outside coming into the space, think about this stuff is like, why am I going to try to pick which L2 is going to beat all the other 15 L2s? Or why am I going to try to pick the one dApp that's going to beat out all the other dApps?
Yeah.
Unless you've got something with like a tremendous moat, like a Uniswap. But obviously we need the fee switch to get turned on for the Uni token to start performing well. I think ultimately it just comes back to like, I'm just going to buy the L1 token.
Yeah.
All right. Like, was probably the best way to get exposure to all of the memes on Solana is probably just to buy Sol, because people were having to buy Sol and it was driving activity, which was making Sol more favorable from like a valuation relative to network activity standpoint. So I think that people that coming in the space, I talked to a fair amount of boomers in New York that are like thinking about allocating to crypto, and like they don't have time to go in and do fundamental analysis on all these LQs and all these dApps. I think the way that they're thinking about it is like, all right, I'm just gonna I'll buy some Bitcoin, I'll buy some ETH, and I'll buy some Sol, and I'll just like weight the basket between those things. If I want to take more risk, I'll probably weight up the allocation to the latter two, particularly probably Sol, or maybe some other L1 that they love for some reason they want to toss in there. But that's how I think that money that's coming in is probably going to think about allocating.
Yeah, in my view, I feel like it's a great way how you put it. You can buy Solana as kind of a beta proxy for the meme coin activity or for some application that is deployed there or something. But in my view, like, I feel we are converging to a theory that I would maybe coin a Fed ecosystem or something like that, because I feel like going forward, I feel there will be Fed applications, just think about many applications just launching their own rollups now in order to have a say across the MEV, have a say across the fees, and be not reliant anymore on fee spikes that happen on the base layer, right? So basically you detach yourself somewhat from the base layer, but still use it as a settlement layer and as a source of truth and for credible neutrality. But at the same time, you have these base layers that also function and will, in my opinion, also capture a lot of value, because having this credibly neutral base layer is very valuable. And then I also think about, like, just in the last couple of months, I think more and more projects really do want this kind of on-chain risk-free rate from Ethereum staking. Think about that AO protocol that stems from Arweave. What they do now is they distribute their token 100% to everybody that sends staked ETH into their contract. So they use the staking yield to basically fund their research and their development and distribute their token on top. I think they farm like 50 million now per year right now, based on 500,000 ETH that are staked there. What I'm trying to say is, so the base layer can be this pristine collateral. It's a settlement layer, but it's also, I mean, the gas token itself is also very valuable, because if you want to settle there, it's similar to countries asking us to pay taxes in their currency, right? So Ethereum forces me to pay in ETH. Many rollups use ETH as their settlement currency. So I feel we are converging to, you will have Fed applications, but you will also have Fed protocols. Yeah, I think it's very exciting. And also, another thing that I wanted to mention is, I feel many people in the space are starving for value investing. I hope we see more sound tokenomics in the future, and maybe with the regulatory clarity coming up, maybe there's a path towards basically these governments saying, hey, if that protocol is sufficiently centralized, feel free to share your revenue. It's okay, and you're not a security. Like, that would be super nice.
No, I agree. I think your first point, you could be right. I really don't know. I just think that, it comes down to like liquidity adjusted, risk adjusted. Like if you're a multi-billion-dollar fund that's just looking to like get exposure to crypto, you're probably just going to buy the underlying like base layer token. But then, if you're like basically, you can do more like stock picking, or, you're way more active, then yeah, sure. Like you're probably people that look to allocate to the application level. So I think that makes sense.
Nice. I think enough about the Fed apps, though. I want to switch gears and move into our dear friend Jay Powell and his statement on Monday. I think that was the 15th. He hinted at like front-running inflation. I know we touched on it before, but now let's maybe go a little bit deeper, because he's taking into account the lag effect of his policy. So hinting at, okay, we're going to cut well before the 2%. Currently we're at 3, 10 basis points less than expected. And then unemployment like starts moving up 10 basis points in the opposite direction. So you have this interplay between the two that's going on right now, and that's giving us the sort of establishing the trend, if you want to put it that way. So my question is, like, what is the magic number for inflation? Is it going to be a consistent drop, 2.8, 2.7 before September, being the ideal target for the Fed to like cut? And then is it going to be 25 bips or 50 bips to give us that soft landing? What's your take?
The short answer is I don't know, and I have no idea. But I will say, like, the thing that the Fed cares about is basically managing inflation and employment. And so when we look at both of these things, we're seeing inflation has come down. Unemployment's held up all right, but it's showing signs of weakness, and it's kind of a proxy for like how the underlying economy is doing. So I think, frankly, Jay Powell is, like steered the ship better than a lot of people thought, including myself, that were like, he can't even raise interest rates 25 bips or else the entire global economy is going to collapse because of how much debt's in the system. And the economy has been incredibly resilient. But I think the way that you should think of it as a market participant is like, if you have a forward-looking skew of where, like what's the asymmetry of like where rates are headed from here, it's clearly down, right? It's not asymmetrically skewed towards rates going higher from here. And so I suspect that we get rates in the back half of the year. I don't know if it's at the September meeting. If he had me put a gun to my head and said when will it be, I would say probably September. But towards the end of the year, we'll probably start to see rates get tapered off, and it should be positive for risk assets. There's been a lot of talk of are rate cuts like negative for the market, and I think that's just basically a very like lazy argument that people have looked at like the last two times that the Fed has cut. Felix Jalvin, who used to be an analyst for Reflexivity, now works over at Blockworks and puts out a ton of great stuff. I think he's one of the smartest guys in the space on the macro stuff. I encourage everybody to check out one of the recent blog posts that he put out, basically covering this on. There's like a context in terms of thinking through the stuff. Is the rate cut coming as basically a way to combat this very rapid economic decline? Is it coming to combat some credit event or like contagion like 2008? Is it a normalization cut? And I think the cuts that maybe we would get in the back half of the year are more so fall into this like normalization camp without any like rapid deterioration in the economy. If you think of basically just like looking at the real interest rate, which is just looking at Fed funds and the delta between that and CPI inflation or whatever inflation measure that you want to look at, unless they cut rates, the economy, monetary conditions are tighter than they were 2 months ago, 3 months ago, even though the Fed hasn't changed the Fed funds rate, because inflation has come down. So the delta between that means that the real interest rate has gone up. And the inverse of this was true at the end of 2021. You've had the Fed continue to keep rates low, but inflation was starting to spike. So real rates continued to get lower, and you actually had monetary conditions, financial conditions are easing more and more at the end of 21. So now I think you're seeing the inverse of that. So I suspect that the Fed will cut in the back half of the year to normalize that out.
Yeah,
Nice.
hey, that's a really cool take, and I would love to follow up because I fully agree. I'm pretty sure we are dealing with this normalization cut because, as you outlined, the federal fund rates, the real rates decrease because inflation is basically dumping or going down. And therefore, in my opinion, we are dealing with this normalization cut. So there's this incentive to reduce basically the restrictiveness of the Fed again. Plus, in my opinion, there's also this notion of fiscal dominance, which is also new in that entire setup. And this is kind of the second incentive that the Fed has basically to ease. And the reason why I mentioned this is that, in my opinion, we likely deal with this kind of fiscal-driven inflation. Remember COVID back then, where we got this huge injection from the fiscal side, rather than lending-driven inflation. And thus, in my opinion, easing interest rates when the federal debt is already above 100% to GDP might help more in transitioning to a healthier economy than suppressing the private sector, right? So just to sum up, maybe in your view, do you think that rate cuts are priced in? Do you think they are bearish, short or midterm? What do you think will be the market reaction when we see a potential easing in September? Because I feel it might be a non-issue or a nothing burger.
Yeah, I tend to lean into the camp of it being a nothing burger, but at the same time, you could have a lot that changes between now and then. So obviously, for example, like if the bullet that shot at Trump had moved over 2 inches, then it would be a whole different discussion. Or if we start to see some type of geopolitical stuff, or you never know. I mean, anything can take place between now and then. Also depends like how the market trades into the event. If the market's going parabolic into the Fed meeting, then like we'll probably sell off after it or something to wipe out a lot of people that may have like leveraged long into the event. So it depends on like a lot of different things that could change between now and then. But like on a broader view, again, I think like the better question is to ask like what's kind of the asymmetry of like where you think rates are headed from here. I think from here on out, it's still very much skewed towards more easing over the coming couple of years.
Nice. Hey, Will, I feel like today was a legit treat. We gained a lot of insights, both vertically and also horizontally when we think about our space. But before we wrap up, I wanted to ask you, is there anything of great relevance that we missed discussing and that you want to touch on?
No, I don't think I have anything else to get off my chest.
No, fair. I think one spicy thing I want to bring though is, I think it was yesterday Trump just came out and was like, we're stopping CBDCs. There will not be one. And I must say that I'm loving the policy coming from our nominee right now. So yeah, it's going to be an exciting year. But thank you so much. It's a pleasure to have you.
And on behalf of Bitcoin Suisse and our audience, thanks for sharing the time and your great insights. Highly appreciated. For our listeners who want to learn more about Will's work and his research shop, be sure to check out the links we provide in the show notes. If you enjoyed the episode, as always, please subscribe, rate, and leave a review. Until next time again, and thanks for joining our discussion and conversation, Will. It was great having you.
Thank you guys. It was an absolute pleasure.